Based on the historical data and forecast, Bitcoin has shown volatility, fluctuating between support of 100,900 and resistance of 109,300. The RSI has mostly stayed between 40 and 60, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have widened and narrowed, reflecting periods of increased and decreased volatility. Considering the recent upward trend in the forecast prices, particularly reaching 107,700 on July 2, 2025, a bullish strategy is warranted. Therefore, I recommend a long position entry at 105,500 on June 28, 2025, with a stop-loss placed at 104,500 to mitigate potential downside risk. The initial target price will be 107,500, aligning with the forecast price for June 30, 2025. To refine this strategy, I will incorporate the RSI and Bollinger Band signals. If the RSI falls below 30, indicating an oversold condition, we will enter a long position at the prevailing price, setting a stop-loss at 100,900 and a target price at the nearest resistance level, 109,300. Conversely, if the price touches the lower Bollinger Band, it signals a potential buying opportunity. If the price touches the upper Bollinger Band, it signals a potential selling opportunity. Given the forecast indicating a continued upward trajectory, the primary strategy will be a long position with adjustments based on RSI and Bollinger Band signals, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Ethereum has been experiencing a downtrend, particularly evident in the price drop from $25.20 to $23.20. The RSI consistently remained below 50, indicating a bearish momentum. The forecast suggests a continuation of this downward trend, with prices hovering around $2,300 to $2,400. Considering these factors, I recommend a short position strategy. Enter a short position at $2,400, placing a stop-loss order at $2,440 to protect against unexpected upward movements. The initial target price is $2,320, aiming to capitalize on the anticipated decline. To refine this strategy, I will incorporate the Bollinger Bands. The price has consistently been near the lower band, suggesting potential for further decline. If the price breaks below $2,320, I will adjust the target price to $2,220, aligning with the established support level. The RSI is currently in the oversold territory, which might indicate a temporary bounce. However, given the overall bearish trend, I believe the downward pressure will persist. Therefore, maintaining a short position with the described entry, stop-loss, and target prices is the most efficient strategy to achieve high returns. Based on the historical data and forecast, XRP exhibits a sideways trend with price fluctuating between support at $2.02 and resistance at $2.14. The RSI fluctuates between 35.2 and 50.3, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has been mostly contained within the bands, with occasional touches of the upper and lower bands. Considering the forecast for the next week, the price is expected to hover around $2.08 to $2.13. We will implement a combined strategy leveraging RSI and Bollinger Bands to capitalize on short-term price movements. Our strategy involves a tiered approach with three distinct positions. First, when the RSI falls below 35, we will enter a long position at $2.05, placing a stop-loss at $2.02 and a target price at $2.14. Second, when the RSI rises above 70, we will enter a short position at $2.14, placing a stop-loss at $2.16 and a target price at $2.02. Third, when the price touches the bottom of the Bollinger Bands, we will enter a long position at $2.08, placing a stop-loss at $2.05 and a target price at $2.17. We will allocate 40% of our portfolio to the RSI strategy, 30% to the Bollinger Band strategy, and 30% to the combined RSI and Bollinger Band strategy to maximize returns while managing risk. Based on the historical data and forecast, BNB shows a volatile trend with periods of consolidation and minor upward movement. The RSI consistently remains below 50, indicating a generally weak momentum. The price has been bouncing around the support price of $628 and the resistance price of $645. The Bollinger Bands have been widening, suggesting increased volatility. Considering these factors, I propose a moderately bullish strategy with a focus on capitalizing on potential upward movements within this range. My strategy involves a tiered approach. First, I will initiate a long position at $636, coinciding with the first day of the forecast period and near the recent support level. A stop loss will be set at $628, just below the established support, to mitigate potential losses. The initial target price will be $643, aligning with the first forecast price and a reasonable upside from the entry point. If the price reaches $643, I will move the stop loss to the entry price of $636 to secure profits and allow for further gains. The final target price will be $646, based on the forecast and the recent resistance level. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while minimizing risk. Based on the historical data and forecast, Solana shows a downtrend with fluctuating volatility. The RSI consistently remains below 50, indicating a bearish sentiment. The price has been testing the support level of $131 for several days, and the forecast predicts further decline towards $130. The Bollinger Bands show contraction, suggesting a potential breakout. Considering these factors, I recommend a short selling strategy. The entry price will be $134. The stop loss will be set at $138, just above the upper Bollinger Band and recent support. The initial target price is $130, aligning with the forecast. To refine the strategy, I will implement a tiered approach. After reaching the initial target of $130, I will move the stop loss to break even to protect capital. The next target price will be $126, based on a further extension of the downtrend. This strategy combines RSI signals, Bollinger Bands analysis, and price action to maximize potential returns while minimizing risk. The portfolio will allocate 60% of capital to this short selling strategy, 30% to a neutral strategy, and 10% to a long strategy for diversification. Based on the historical data and forecast, TRON shows a sideways trend with price fluctuations between 0.264 and 0.275. The RSI fluctuates around 50, indicating neither overbought nor oversold conditions. The Bollinger Bands have been relatively stable, suggesting low volatility. Considering the forecast for the next week, the price is expected to remain within a narrow range, potentially reaching 0.275. Given this, I recommend a moderately bullish strategy focusing on short-term price movements. My strategy involves entering a long position when the RSI dips below 40, signaling an oversold condition. The entry price will be $0.264+. A stop-loss order should be placed just below the support level at $0.261+ to limit potential losses. The target price will be set at the recent resistance level of $0.275+. If the RSI reaches above 80, indicating an overbought condition, I will exit the position to secure profits. This strategy combines RSI and Bollinger Bands to capitalize on short-term price fluctuations while managing risk effectively. Based on the historical data and forecast, Dogecoin shows a downtrend with significant volatility. The price has been fluctuating within a range bounded by a support of $0.151 and a resistance of $0.175. The RSI consistently stays below 50, indicating a bearish momentum, with periods of oversold conditions below 30. The Bollinger Bands show contraction, suggesting a potential breakout. Considering these factors, I recommend a contrarian strategy focusing on short-term opportunities. I propose a strategy that combines RSI and Bollinger Bands to capitalize on short-term price swings. We will initiate a long position when the price touches the support level of $0.151 and the RSI is below 30, indicating an oversold condition. The entry price will be $0.151. To mitigate risk, we will set a stop-loss order at $0.147, just below the bottom of the Bollinger Bands. Our target price will be $0.161, aligning with the recent resistance levels and a potential bounce. This strategy aims for a quick profit of $0.01 with a defined risk management approach. Based on the historical data and forecast, Cardano exhibits a downtrend, supported by consistently declining forecast prices. The RSI consistently remains below 30, indicating oversold conditions, while the price fluctuates within the lower Bollinger Bands. Therefore, a contrarian strategy focusing on short-term bounces is recommended. We will initiate a long position at $0.498 when the forecast price reaches this level. Given the strong downtrend, a tight stop-loss should be placed at $0.49 to limit potential losses. The initial target price will be $0.51, aligning with the lower Bollinger Band and anticipating a modest rebound. To refine this strategy, we will incorporate a dynamic target adjustment. If the price reaches $0.51, we will move the stop-loss to the entry price of $0.498, securing a profit. If the price continues to rise, we will set a second target at $0.53, capitalizing on further potential upward movement. This combined strategy leverages the oversold RSI, Bollinger Band dynamics, and a cautious approach to risk management, aiming for high returns in this volatile market environment. The portfolio will consist of 60% of the strategy. Based on the historical data and forecast, Bitcoin Cash exhibits an upward trend, consistently testing and breaking through resistance levels. The RSI values generally fluctuate between 54 and 69, indicating neither strong overbought nor oversold conditions. However, the forecast data suggests a continued upward trajectory, with prices predicted to reach $534. Therefore, I propose a long-term bullish strategy with a focus on capitalizing on the predicted price increases. My recommended strategy is to enter a long position at $492 with a stop-loss set at $478, coinciding with the established support level. The initial target price will be $527, aligning with the forecast high for the week. If the price reaches this target, we will then adjust the stop-loss to $492 to protect profits and extend the position further. The final target price will be $534, based on the forecast data, offering a substantial return on investment. This strategy combines technical indicators, support and resistance levels, and forecast data to maximize potential gains while minimizing risk. Based on the historical data and forecast, SUI shows a downtrend with increased volatility. The RSI consistently remains below 50, indicating a bearish sentiment, and dips below 30 several times, suggesting oversold conditions. The Bollinger Bands have widened, confirming the increased volatility. The forecast for the next week projects a continued downtrend, with prices hovering around $2.34 to $2.54. Considering these factors, I recommend a short selling strategy with a focus on capitalizing on the predicted downward movement. My recommended strategy is to initiate a short position when the RSI reaches an oversold level of 20 to 25. For example, on June 27, 2025, the RSI was 26.9, which is a good entry point. The entry price would be $2.71. Set a stop-loss order slightly above the upper Bollinger Band to protect against unexpected upward movements. In this case, the stop-loss price would be $2.85. The initial target price is the support level of $2.45. If the price hits the target, we can move the stop-loss to break even and set a second target at $2.34, based on the forecast. This strategy aims to capture the predicted downward trend while managing risk effectively. Based on the historical data and forecast, Immutable has been in a downtrend, consistently trading below the Bollinger Band center and nearing the support price of $0.361. The RSI consistently remains below 30, indicating an oversold condition. Considering the forecast for the next week, the price is expected to continue this downward trend, reaching as low as $0.35. Therefore, I recommend a contrarian strategy, anticipating a potential bounce after reaching the support level. My strategy involves a long position entry at $0.374, placing a stop-loss order at $0.35 to limit potential losses. The initial target price is set at $0.416, aligning with a recent high. If the price reaches $0.416, consider moving the stop loss to break even to protect profits. A secondary target price is $0.45, based on the resistance level. This strategy combines the oversold RSI signal with the anticipated bounce at the support level, aiming for a high return trade with defined risk management. Based on the historical data and forecast, Aave demonstrates a volatile trend with periods of decline and recovery. The support price of $227 acts as a floor, while the resistance at $264 caps potential upside. The RSI fluctuates around 50, indicating neither strong overbought nor oversold conditions recently. However, the forecast anticipates a dip to $244 on June 28, 2025, followed by a recovery, suggesting a potential short-term downward trend. Considering these factors, I propose a short position at $258 with a stop-loss order set at $266, just above the recent resistance, to protect against a potential upward breakout. The target price for this short position will be $244, aligning with the initial forecast price. To refine this strategy, I will incorporate the Bollinger Bands. The price consistently trading near the lower band suggests a potential for further downside movement. Therefore, if the price falls below $244, I will initiate a long position at $243 with a stop loss at $244. The target price for this long position will be $254, aligning with the forecast price. This combined strategy aims to capitalize on both short-term downward and upward movements, maximizing potential returns while mitigating risk through strategic stop-loss placements. Based on the historical data and forecast, Sui shows a downtrend with increased volatility. The RSI consistently remains below 50, indicating a bearish sentiment, and dips below 30 several times, suggesting oversold conditions. The Bollinger Bands have widened, confirming the increased volatility. The forecast for the next week projects a continued downtrend, with prices hovering around $2.34 to $2.54. Considering these factors, I recommend a short selling strategy with a focus on capitalizing on the predicted downward movement. My recommended strategy is to initiate a short position when the RSI reaches an oversold level of 20 to 25. For example, on June 27, 2025, the RSI was 26.9, which is a good entry point. The entry price would be $2.71. Set a stop-loss order slightly above the upper Bollinger Band to protect against unexpected upward movements. In this case, the stop-loss price would be $2.85. The initial target price is the support level of $2.45. If the price hits the target, we can move the stop-loss to break even and set a second target at $2.34, based on the forecast. This strategy aims to capture the predicted downward trend while managing risk effectively. Based on the historical data and forecast, reserve rights shows a recent downtrend, particularly noticeable in the last week's forecast prices consistently below the recent closing prices. The RSI consistently stays below 50, indicating a prevailing bearish momentum. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential oversold condition. Considering these factors, I recommend a contrarian strategy focusing on short-term bounces. The entry price will be $0.00582, coinciding with the support level and the lower Bollinger Band. A stop loss will be placed just above the upper Bollinger Band at $0.00741 to limit potential losses if the price continues to decline. The target price will be set at the resistance level of $0.00679, aiming to capture a quick profit from a potential rebound. To refine this strategy, I will implement a layered approach. Initially, we will take a long position at $0.00582 with a stop loss at $0.00741 and a first target at $0.00644. If the price reaches $0.00644, we will move the stop loss to the entry price of $0.00582, securing some profit. If the price continues to rise, we will set a second target at $0.00679. This layered strategy allows us to maximize profit while minimizing risk, taking advantage of short-term price fluctuations within the established support and resistance levels. This approach balances the bearish trend with the potential for short-term bounces, aiming for a high return, relatively low-risk investment. Based on the historical data and forecast, Raydium demonstrates a downtrend, particularly evident in the recent forecast prices ranging from $1.78 to $1.65. The RSI consistently hovers around the oversold territory, fluctuating between 33.8 and 43.0, indicating potential for a rebound but also reflecting underlying selling pressure. Furthermore, the Bollinger Bands are narrowing, suggesting a period of consolidation before a potential breakout. Considering these factors, I recommend a contrarian strategy focused on short-term gains. My strategy involves entering a long position at $1.78, capitalizing on the oversold RSI and anticipating a potential bounce from the support level of $1.95. A stop loss should be placed at $1.65 to limit potential losses if the downtrend continues. The target price is set at $2.06, aligning with the recent high and providing a reasonable profit margin. This portfolio combines the RSI, Bollinger Bands, and support/resistance levels for efficient trading. This is a high-risk, high-reward strategy suitable for experienced traders with a strong risk tolerance. Based on the historical data and forecast, Render has shown a declining trend, with prices fluctuating around the support level of $2.95. The RSI consistently remained below 40, indicating a generally oversold condition. The Bollinger Bands have been widening, suggesting increased volatility. Considering these factors, I propose a strategy that combines RSI and Bollinger Bands to capitalize on potential rebounds. We will initiate a long position when the RSI reaches an oversold level below 30 and the price touches the bottom of the Bollinger Bands. Specifically, we will enter a long position at $2.67, placing a stop-loss order at $2.6 to protect against further downside risk. Our target price will be $2.88, aiming to capture a potential bounce from the oversold territory. To refine this strategy, we will incorporate support and resistance levels. The support level of $2.95 acts as a key area where the price might find support. Therefore, if the price approaches $2.95 without showing signs of reversal, we will exit the position. Conversely, if the price breaks above the resistance level of $3.21, we will consider tightening the stop-loss order to $3.12 and adjusting the target price to $3.4. This adaptive approach allows us to respond to changing market conditions and maximize potential returns while minimizing risks. This portfolio combines the three strategies to achieve the most efficient result. Based on the historical data and forecast, Quant has shown volatility with a recent downward trend. The RSI consistently remained below 80, indicating no overbought conditions, but dipped below 34 on several days, suggesting oversold periods. Considering the forecast for the next 2 weeks, the price is expected to fluctuate between $96.7 and $101. The Bollinger Bands show that the price has been approaching the lower band, which may indicate a potential bounce. Therefore, I recommend a long position strategy focusing on capitalizing on short-term bounces from the oversold levels. My proposed strategy is to enter a long position when the RSI falls below 35 and the price touches the lower Bollinger Band. Specifically, enter a long position at $96.7. Place a stop-loss order at $90.9 to limit potential losses. Set a target price at $101, aiming to capture a reasonable profit from the anticipated rebound. This strategy combines the RSI and Bollinger Bands to identify potential buying opportunities during periods of relative undervaluation, with a focus on managing risk through strategic stop-loss placement. Based on the historical data and forecast, KAITO shows a generally sideways trend with significant volatility. The RSI consistently remains below 50, indicating a weakening upward trend. The forecast data predicts a downward movement, with prices decreasing from $1.3 to $1.25. Considering the support price of $1.32 and the recent price fluctuations, I recommend a short position strategy. The entry price will be $1.3. To mitigate risk, set a stop-loss price at $1.36, just above the recent high. The initial target price will be $1.25, aligning with the forecast. To refine the strategy, we'll incorporate the Bollinger Bands. The price consistently trades near the lower band, reinforcing the bearish outlook. If the price touches the lower Bollinger Band, which is $1.2, consider a partial profit taking at $1.25 and adjust the stop-loss to the break-even point. If the price continues to decline, the final target price will be $1.25. This combined strategy utilizes both RSI and Bollinger Bands to maximize profit while minimizing risk, providing a robust approach to trading KAITO. Based on the historical data and forecast, SE shows a volatile trend with a recent upward momentum. The RSI fluctuates significantly, moving from oversold territory, below 20, to overbought territory, above 80, within a short period. The Bollinger Bands also indicate volatility, with price frequently touching or crossing the upper and lower bands. Considering the recent price surge and the forecast predicting continued growth, I recommend a long position strategy. The entry price should be $0.255, coinciding with the initial forecast price. The stop-loss should be set slightly below the support level at $0.244 to mitigate potential losses if the price reverses. The target price for this trade should be $0.287, aligning with the forecast for July 4, 2025. This strategy combines the RSI and Bollinger Band signals. If the RSI dips below 30, consider an additional entry at $0.26. If the price reaches the upper Bollinger Band, consider taking partial profits at $0.271 and setting a trailing stop-loss to capitalize on further upward movement. This portfolio aims for a high return by leveraging the anticipated upward trend while managing risk through strategic stop-loss placement and profit-taking opportunities. Based on the historical data and forecast, Pudgy Penguin shows a volatile trend with periods of consolidation and minor upward movement. The RSI fluctuates between 37.4 and 54.6, indicating neither strong overbought nor oversold conditions consistently. The Bollinger Bands have been widening and contracting, suggesting periods of increased and decreased volatility. The forecast for the next week indicates a potential slight downward trend initially, followed by a possible recovery towards 0.00948. Considering these factors, I propose a strategy focusing on short-term swings, capitalizing on minor price fluctuations. The strategy involves a combined approach using RSI and Bollinger Bands. We will initiate a long position when the price touches the lower Bollinger Band and the RSI is below 40, signaling a potential oversold condition. The entry price will be $0.00891 plus $. The stop-loss will be set just below the lower Bollinger Band at $0.00861 plus $, to limit potential losses. The target price will be the middle Bollinger Band at $0.00985 plus $, aiming for a moderate profit. If the price fails to reach the target within 3 days, we will exit the position to avoid prolonged exposure. This strategy aims to capture quick profits from short-term volatility while managing risk effectively.